Right now, money is quietly changing hands, and most people have no idea it's happening. A window is opening, the kind that only appears once every decade. And unlike the opportunities advertised to hedge funds and institutional investors, this one is accessible to ordinary people. But here's the uncomfortable truth. Most will miss it entirely, not because they lack intelligence, but because they don't understand what's actually happening beneath the headlines. Every major financial crisis in modern history has quietly minted a new class of wealthy people, not lottery winners, not insiders, people who understood one simple principle: a financial crisis is a clearance sale on the world's most valuable assets. In this video, I'll show you exactly what's on sale, why it's happening, and how to position yourself before the window closes. Hit like so the algorithm gets this in front of the people who need it most. Let's get into it. So why do most people miss these moments? One word: fear. When the news cycle floods with words like recession, crash, and collapse, the human brain doesn't think, it reacts. It pulls back, hoards cash, and waits until things feel safe again. That instinct kept our ancestors alive on the savannah. In financial markets, it quietly destroys generational wealth. Here's the brutal math. J.P. Morgan tracked S&P 500 investors over a 20-year window from 2003 to 2022. Stay fully invested, and $10,000 grows to over $64,800. Miss just the 10 best trading days, 10 days out of more than 5,000, and that same investment shrinks to $29,000. You lose more than half your gains by sitting out less than 2 weeks over 2 decades. The pattern is consistent across every cycle. The biggest gains cluster inside the scariest moments. If you don't understand the cycle, you will always be positioned for the last crisis, not the next opportunity. How we got here. The 2026 reality. To see the opportunity clearly, you need to understand the world we're actually living in right now, not the world from 2 years ago. We aren't simply managing the lingering effects of the pandemic anymore. We're navigating a fundamental realignment of global power. The escalating tensions between the U.S. and Iran have sent shockwaves through energy markets in a way most investors weren't prepared for. When the Strait of Hormuz, the single most critical oil artery on the planet, carrying roughly 20% of the world's petroleum, comes under threat, the entire global economy feels it. Oil prices have spiked, shipping costs have climbed, and for the first time in years, the safe haven trade is back in full force. Gold is moving, the dollar is shifting, and the dominant emotion driving markets right now is one we've seen before: panic. Investors see conflict, they see volatility, and their first instinct, almost universally, is to sell everything and hide. But this is precisely where the transfer of wealth happens. It always has been. The people who walked away from 2008 wealthier didn't have better information. They had better instincts about what panic actually means for asset prices.
So what's actually on sale right now? Because of this geopolitical fog of war, 3 specific doors have opened. They won't stay open long. 1. The fear discount in tech. While the financial media is consumed with oil charts and defense stocks, high-quality technology companies with zero exposure to the Middle Eastern conflict are being sold off in the same wave of panic. The market, in its fear, isn't making distinctions. It's hitting the sell button indiscriminately. That means you are being handed the opportunity to buy 2030's dominant companies at prices closer to 2023 valuations, simply because a headline scared someone into selling. The underlying business hasn't changed. The long-term trajectory hasn't changed. Only the price tag has. 2. The new energy era. Here's the pattern that repeats every time traditional energy is disrupted by geopolitical conflict. The transition to alternative energy accelerates. Every oil spike writes another check for the infrastructure that will eventually replace it: solar, wind, nuclear, and the grid systems that support them. The smart money isn't just riding the short-term oil trade, it's buying the pipes, the reactors, and the transmission lines that the next 30 years of energy will run through. That positioning is happening right now, quietly, while everyone else argues about oil prices. 3. Cybersecurity, the new essential utility. Modern conflict is no longer fought exclusively with tanks and warships, it's fought with code. State-sponsored cyber attacks on critical infrastructure, power grids, financial systems, communications networks have moved from theoretical threat to documented reality. What that means for investors is significant. Cybersecurity is being repriced from a discretionary technology expense into an essential utility, the same way electricity or running water is non-negotiable. The companies building that infrastructure are still at valuations that reflect the old category. That window is closing as the market catches up to the new reality. Part 4. 3 pillars of the broader opportunity. 1. Equities and dollar-cost averaging. Stop trying to call the bottom. Nobody can do it consistently, not even the professionals. Instead, use dollar-cost averaging. Invest a fixed amount every single month regardless of conditions. When prices are low, you buy more shares. When prices are high, you buy fewer. Over time, your average cost stays favorable, and the math compounds in your favor. $500 a month at an 8% average return over 30 years becomes roughly $750,000. Wait just 5 years to start, and that number drops to around $500,000. Time in the market is worth more than perfect timing. The best day to start was yesterday. The second best is today. 2. Real estate. Real estate is harder right now because elevated mortgage rates have locked many buyers out of the market. But here's the insight most people miss. Interest rates are temporary. Your purchase price is permanent. When interest rates eventually normalize, and historically they always do, sidelined buyers will flood back in. Prices will move fast. The people quietly making purchases today, through the noise and the doubt, are the ones who will capture the equity surge when that demand returns. 3. Earning power, your most underrated asset. Your income is the engine that funds every other strategy on this list. Without it, nothing else works. In today's economy, high-leverage skills, AI implementation, digital marketing, sales, content creation, are compounding in value faster than most traditional credentials. A Georgetown University study found that degree holders earn roughly $1 million more over their lifetime than non-graduates. But in 2026, the right specialized skill set can close that gap in a fraction of the time and at a fraction of the cost. Don't overlook the return on investing in yourself. Part 5. The leverage tool most people ignore. If earning power is the engine, YouTube is the multiplier. It's the only platform where you can build a brand, generate scalable income, and break the direct trade of time for money, all simultaneously and all for free. I've built my entire business on this, and I believe it's the single greatest individual leverage tool of this decade. Because I want to see you take advantage of this window, I've opened a free community, link in the description, where I share my exact strategies for building faceless channels and monetizing expertise. If you're serious about taking action, that's where to start. Part 6. The mindset that makes or breaks it. The math of wealth building isn't complicated. The psychology is. Loss aversion, a concept well documented in behavioral economics, means the emotional pain of losing $1,000 feels roughly twice as intense as the pleasure of gaining the same amount. That asymmetry makes inaction feel rational, even when it's quietly catastrophic. The wealthy aren't fearless. They just build systems that make discipline automatic. Automate your investments. Pay yourself before you can spend it. Cut the noise. Stop checking your portfolio every day. It changes nothing except your anxiety. Think in decades. Wealth is built in 5- and 10-year blocks, not weekly market moves. The window is open. Geopolitical fear, elevated rates, and indiscriminate selling have repriced some of the best assets in the world. You have 2 choices: freeze and wait for safety, then buy back in at all-time highs, or Understand the cycle, recognize what's actually on sale, and position yourself while the discount lasts. If this gave you a clearer picture of where we are, subscribe and watch the next video.